Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a breakdown of the action in today's session, where we saw a lackluster day for stocks, which couldn't hold on to their strength early on in the session. So a pretty disappointing close here, all in all, with an especially weak-looking NASDAQ.
Yeah, absolutely. And I will just correct you real quick because it wasn't all stocks. It was certainly the indexes, but
You're
we're going to
right.
cover some of the stocks that were looking a lot better than the indexes, including First Solar, Freeport-McMoRan, and also Shift4 Payments.
Absolutely. We're covering the standouts in this market, and we will get to those. But first, let's take a look at the major indexes today, with the NASDAQ down about 0.7%, the S&P 500 off by 0.5%. The Dow closed slightly positive by the end of the day, but it seems like we're seeing weakness. If we get an update for the NASDAQ, it's off highs. We're getting resistance at the 21-day line, and now looks like we've got a close below the 200-day line. Let's see, 11,405. Yep, with the NASDAQ closing at 11,379. Let's see what the low was a couple days ago. So it looks like we did manage to hold above the low from a couple of days ago, but not by much.
Yeah, it's a little consolation when you're holding above lows that we're not looking great at the lows. So yeah, the Nasdaq, look, we're trending below that 21-day moving average line at this point, and every time we come up to it, we just can't hold. So that's an issue. I was actually going through my market school model yet last night, and I was looking at times in which we've had this trending below the 5-day moving average line, and usually that's a time where you don't want to have much exposure. That 21-day line can be pretty important. So now, we've been talking about this critical juncture at the 200-day moving average line. I'm not going to say that, just like when we cross it briefly and by a little bit, it's not enough to claim victory. I don't think this is enough to claim defeat, but you certainly have to pay attention to the fact that every time we seem to get any type of strength, we just can't hold on to it. And it's got that bear market feel of sometimes we're starting off strong, but can't hold it until the close.
Well, what's your take on the volume profile? At least the gains in January were coming in strong volume. It doesn't, we have a couple of distribution days, but anything concerning from that perspective?
We've been really kind of skirting away from the distribution days, to be honest. It's one of those things where a lot of times on the worst days, the volume comes in just a little bit under the previous day. And when the volume does spike, it just is not quite enough to count as distribution. So it's certainly a little bit worse on the S&P 500. We have 3 days on the NASDAQ composite, but we are up to 5 on the S&P 500. So things are looking a little bit worse there, where you're just but look, the NASDAQ was the one that had all of the volume on the upside in January. So it is kind of nice that you aren't seeing it on the downside as much. But the S&P 500 is showing it. So that's something you have to pay attention to. And on the S&P 500, we've got that 4,000 level that just seems like it's an area that we can't get past, and we have now lost the 50-day moving average line, closing below it again, like we did last week.
Yeah, looking a little vulnerable here. And with all of this being said, and we have to take the technical analysis day by day, but in terms of taking a step back and making sure we're still staying open-minded, what are your thoughts on that, Justin?
Well, yeah, I think you have to be open-minded for either case. This could just be a pullback. We could be getting support here. We could be ripe for a bounce, but we could also get worse. So, we have a new month. February was not great, in terms of the pullback, kind of knocking things around. And the indexes are still kind of hiding some of the destruction that is happening underneath the surface. We've had some big landmines, especially with this earnings season. But on the other hand, we've also had some strong gains in some of the stocks. I mean, personally, I was up today. I was a little surprised, because of just some of the things I own. There have been these pockets of strength. A lot of the chip makers have still been doing okay. So, you are still getting these pockets of strength, and it's kind of what we call the stock pickers market. It's maybe where the indexes aren't showing where some of that strength is, but if you're in the right stuff, you may be having a fine time. But if you're in the wrong stuff, man, you could be getting clobbered.
Yeah, and we'll be taking a look at some that are showing that strength doesn't mean it's going to last. Though
Right.
we still got to focus on the stocks that are showing that strength. We'll quickly take a look at the Dow and the Russell 2000. So the Dow reversing higher here today. Maybe it looks like finding support around those mid-December lows, right above the 200-day line. And IWM small caps had been looking a bit stronger and still are. We're seeing some daylight between where the Russell 2000 is and the 50-day and the 200-day line. But we've still got that resistance at the 21-day line. We're watching that very closely in addition to this declining tops trend line. Let's also take a look at the 10-year Treasury yield getting back up to essentially that 4% level.
Yeah, it's right there, and that's something that you gotta think of this. There's a lot of people looking at CDs and this risk-free investment that you can make. And with a 3-month or 6-month or 9-month, a very short term, you could be getting an annualized return of 5%. And so it's a little bit hard to kind of ignore that, that possibility, especially when you've got kind of a choppy market right now. But it's one of those things where for a lot of us, we're still looking at those opportunities in the stock market. And while there is that potential for things to get worse, there's also that potential for a bounce to happen. We certainly do have another month of economic data. We've got another Fed meeting. We've got the CPI, PPI. We've got, even today we had the ISM manufacturing index that kind of started the day out at, 10 o'clock Eastern time. So, there's a lot of data that's going to be coming out. And I think as soon as we start getting a little bit more certainty here that, either inflation has been squashed, or, hey, we're kind of in the long haul of entrenched inflation. And what does the Fed have to do in order to, ramp up their activity in order to really kind of get it out from being entrenched? Those are the two scenarios that people are looking at. And I think once we get some certainty there, then I think it'll be a little bit easier for us to trend either up or down. That remains to be seen.
Exactly. Well said, Justin. And any sector ETFs you want to take a look at today?
Well, the strongest one today was XLE. This is, look, oil and gas has been really tricky. So this was up, over 2%. So really a standout in terms of the sector, the 11 sector spider funds. But certainly I think it's worth looking at SMH, because while the NASDAQ was down, SMH, was kind of holding there. And a lot of these chips have been looking interesting. We should also look at XME. That's the miners and metals. That was looking strong today, and we'll get into some of the reasons behind that. XLB and XLI. XLB is the materials, so kind of related to that XME, but XLI is the industrials, and that is still not looking too bad. I mean, you look at the Dow Jones Industrial Average, and that lost its 50-day moving average line and is really not looking great. But XLI, that is holding its 50-day moving average line. And again, remember the Dow Jones Industrial Average does have, it's got Apple in there, it's got financials in there, it's kind of got a wide range, whereas the XLI is really specific to the industrials, and those do still seem to be holding up pretty well.
All right, well, now let's take a look at some stocks. Here's First Solar, FSLR, surging and sizzling on its earnings report, up almost 16%. Some strong volume in RS line Blue Dot as it gapped up early in the session. Within the first opening 10 minutes or so, it was up about 8% and then really took off from there to clear that traditional buy point and extend its gains throughout the day, Justin.
Yeah, and I actually was looking at this yesterday, and it looked very good yesterday. The amount of volume that came in, and it looked like it was kind of getting to the point where it was crossing a downtrend. But what are you going to do right ahead of earnings? And so those earnings came out just shortly after. They came out yesterday after the close. Really strong move, and you can kind of see that in the early going, it really was looking like it was going to dip for a bit, but it came right back and never looked back, really. And solar has been looking interesting. This isn't alone. CSIQ was another one that we were talking about on IBD Live today. So there is strength here. Solar Edge, JKS. Even if you look at TAN, which is not as strong as First Solar, but it still looks like that's crossing a downtrend. But you can definitely see First Solar is certainly in that leadership position. Enphase, which arguably has better earnings, has been out of favor for a little while on the technical side. So it's a matter of, look, you can have the best earnings in the world, but if there's no appetite for your stock, it's hard to make a big bet there. But
maybe people are looking ahead. I mean, earnings expected to more than double from 2023 to 2024. So maybe it's going to get it together on the earnings front too, and start outpacing Enphase in that regard as well.
Yeah, we'll see. So certainly right now, I think it's a little bit extended given the day's action. So a lot of times what I like to do is I just like to be a little patient, wait for it, see if it can kind of just consolidate these gains up here, hold the gains for the most part, maybe get support right there at the 185 level, which was kind of that previous level of resistance. So that would be a great place for it to get support and hold these gains and build a little platform. And if it can do that, that could give it another place to launch from.
Yes. Okay, next on our list, FCX. Freeport-McMoRan in the mining group, exposure to copper, gold, silver, other metals there as well. Retaking its 50-day line, gapping up today, closing with a gain of 5% in some slightly above average volume, also clearing a trend line, moving up today on some positive economic news out of China.
Yeah, so that's a big thing right now. Remember, we don't live in a vacuum here. It's not just about our economy; it's about that global economy. And China is certainly a large enough economy to really get our attention. So there are signs that reopening in China is having an economic effect and a lot of growth there. So that was one of the driving forces here. But with Freeport-McMoRan, well, so you had copper and you had a lot of these things going up, but Freeport-McMoRan also had the additional element of their Grasberg mining operation in Indonesia, which had some flooding and landslides. It looked like that was kind of coming back online. So that was a big thing that was helping out Freeport-McMoRan. But you have a lot of the miners that have kind of, they're coming up with these things that China will be using if they're going to be growing. So, Freeport-McMoRan also in the copper area is Southern Copper, SCCO. That also had a nice move today. You've got your, kind of broader miners like Rio Tinto out of the UK, BP. Those
BHP.
were coming, BHP, excuse me, coming back up, to their 50-day moving average lines after they had gotten hit quite a bit. So, that's one of the things that was driving that strength in XME that we were talking about earlier.
Absolutely. And last but not least, FOUR. So Justin, we got First Solar, Freeport, and Shift4 Payments here. A little bit of a theme, sponsored by the letter F here today. But Shift4 extending its gains up almost 8% today. Heavy volume. This is a follow-up. This is what we want to see when we see stocks moving strong on earnings, like we saw on Tuesday for Shift4. We want to see a follow-up to that, and that's what we got.
Yes, exactly. So that's the fourth F that we'll put in there, in addition to the follow-up buying, because one of the things that's been a little frustrating with this earnings season is we've had some good gains that just don't last. I mean, you look at Crocs, for instance. Crocs had a nice start after its earnings report and just couldn't hold on to it. Iridium, IRDM, there's just a whole host of these that had these strong gains and just couldn't seem to hold on to them for very long. So the question now is, can we shift that narrative to something like 4, where you not only get the gains on the earnings, but then you follow up with it? And look, it closed kind of mid-range yesterday from its closing range. But if you consider the true range, and again, when you consider the true range, kind of just draw that line and extend the bar all the way down to the previous day's close, that was high in the range. And we went even higher today. So that's kind of the action that you want to see, that it's not just that, hey, we were comfortable with this valuation, but maybe we got a little bit ahead of ourselves, and cooler heads are going to prevail. And think about this a little bit. You want the kind of the hey, this is a really good earnings report, and the more we think about it, the more we think this has some great potential, and that certainly seemed like what was going on with Shift4 Payments today.
That makes sense. All right, now after the close, some things to be aware of tonight. We've got Tesla's Investor Day. Who knows what kind of headlines are going to come out of that and what the street reaction will be, but that's something that we're watching closely. Also, we're going to get a lot of earnings from software stocks, including CRM. We've got a Snow. I think a couple of others as well. Looks like Snow down about 5%, the early reaction there, but Salesforce up about 14%. So we'll have to see what some of these, between these earnings reactions and the Tesla Investor Day, what sort of impact that's going to have come the regular session tomorrow.
Absolutely. And remember, it's not just about the open. You can have all of this stuff happen and, think that things are looking rosy and all the strength is happening at the open, but we've got to hold on to it. And that's been our problem lately. We've had some very strong opens, weak closes. That's bearish. So we'll see what tomorrow brings. So just remember not to put too much weight into the aftermarket and pre-market. Really wait for that open, see how things are playing out, and can we hold it till
well said. 100% agree. We don't even know what Salesforce is going to say on their call. Maybe that has started. We could see these gains fade tonight. We could even see, I mean, there's stocks all the time that they're going to be indicated higher in the pre-market, and then they open up and they're up or down fractionally. So yeah, you got to take that with a grain of salt and see what's actually happening, not only at the start of the regular session, as you said, Justin, but how the day unfolds, which is super critical.
Absolutely.
All right, everyone. Thanks so much for tuning in. We'll be back with more tomorrow morning on IBD Live. So please join us, investors.com/IBD Live, for all the details. We will see you there. And we'll also see you right back here tomorrow after the closing bell. Ken is on a well-deserved vacation, but we've got Ed co-hosting with me tomorrow. So we'll see you then. Thanks for tuning in, everyone.